Welcome. Hello, this is Vern Broders from the Chicago Booth Alumni Finance Roundtable. Welcome to tonight's panel discussion on financial inclusion, by which we mean how do we include all of our demographics in our financial work, and how can we work well with those demographics. I have a distinguished panel this evening. We are going to be moderated by Rob Gertner from the Rustandy Center. There's a few housekeeping notes. Everyone will be muted this evening, all of the, except for the speakers, of course. Your video is off, so you can sit back, relax, and enjoy the session. If you have questions that you would like to pose to the panelists, please use the Q&A function, and some, if not all of those questions, will get asked of our panelists during the evening. So with no further ado, I'd like to introduce Rob Gertner from the Rustandy Center of Chicago Booth. Rob?
Thank you, Vern. It's a pleasure to be here. It is great to see alumni interest in this enormously important topic. And I apologize for my long title on this slide. I will introduce our panelists and then we'll get going. We are still awaiting one of our panelists who I hope will be able to join us shortly. So we have with us, first, Brad McConnell, who is CEO of Accion Chicago, which is the largest micro lender in the Midwest. Accion provides underserved small business owners with the capital, coaching, and connections they need to create jobs and wealth in their communities. Brad has a phenomenal background. He served as Deputy Commissioner and Chief Operating Officer for the Department of Plans and Development for the City of Chicago, where he led the Executive Projects and Operations Unit. Before that, he was the lead economic policy advisor for Senator Richard J. Durbin in Washington. And before that, he was Vice President LaSalle Bank in Chicago, focusing on small business lending and operations. Before that, a manager in Accenture in Chicago and London. So he brings to us government, private sector, and nonprofit sector expertise. Brad has degrees from the University of Notre Dame and Georgetown University. Eric Smith is Vice Chair of BMO Harris Bank, where he's responsible for working with the U.S. commercial banking team and across other lines of business to develop the bank's strategy and product capabilities as it expands nationwide. Eric is a key leader of several firm-wide initiatives, including regulatory affairs, community affairs, and diversity and inclusion. Eric joined BMO in January 2020, so he had a few months prior to COVID, from Fifth Third Bank, where he served as the regional president. Prior to assuming that role in 2016, Eric served as CFO of middle market banking for JP Morgan Chase. And before that, he had banking experience at Merrill Lynch as well. Eric is deeply engaged in the civic sector in Chicago. He's chairman of the board for the Chicago Urban League and the Ann and Robert H. Lurie Children's Hospital Foundation. He's immediate past vice chair of the board for Goodman Theater and is an active board member of multiple other organizations. He has a bachelor's degree from Howard University and an MBA from Harvard Business School. Our third panelist is Ghian Foreman, who is the CEO of the Emerald South Economic Development Collaborative, group that works to develop and support Southside communities through a focus on commercial corridor expansion, sustainable housing, and workforce development. Prior to joining Emerald South, he was executive director of the Greater Southwest Development Corporation, a CDC focused on the improvement of the southwest side of Chicago. Ghian serves on the board of several organizations, including president of Chicago Police Board and member of the Rebuild Foundation. He earned his BS from Florida A&M University and has an MBA from Chicago Booth. So it's my pleasure to welcome all of our panelists this evening. They have a phenomenal set of backgrounds and experiences and current work in the area of financial inclusion, broadly described. So I'm going to ask each of them to spend a little bit of time talking about what they do. From that, we will have a conversation and then open it up for Q&As. Before we get started, I just want to point out, remind people to ask questions using the Q&A function in Zoom, to point out to a couple of events that the Rustandy Center will be hosting. The Rustandy Center is the hub for students and alumni interested in social impact at Booth. And we have, as we've moved all our programming online, we have a number of exciting things coming up. I want to point out that we have another panel on innovating for social equity, which is this Thursday from 5 to 6. And I am on that panel. I don't get to moderate. I have to actually speak at that one. In addition, I wanted to just mention a program for those of you who work with exciting young people in the civic sector, either in the nonprofit sector or the public sector. Chicago Booth has this program called the Civic Scholars Program, which are very large, including full ride scholarships for students in and dedicated to the sector. So if you have promising future leaders that you know that you work with or you are one, please let them know and look at the program. There are, of course, like every other organization, you can connect with the Rustandy Center through all the various social media and other platforms. So please look out for our events. So why don't we get started? I will now pass it over to Brad, who will talk to us a little bit about the work he does at Accion Chicago.
Rob, thank you very much. Eric, Ghian, good to see you, and appreciate everyone's time this evening. I'm going to speak really quickly in an effort to get us to the discussion as soon as we can, inclusive of your questions, because that's how your time, I think, can be best spent. But what I'm going to do briefly is just describe what Accion does, and in this particularly difficult moment, what we're doing in order to help small business owners see themselves through the pandemic. So we'll start with just a brief introduction for what Accion does. So I think as Rob has suggested, our mission is to help neighborhood entrepreneurs grow. And so we do that by providing the capital and the coaching and the connections that small business owners need. We serve all of Illinois and Indiana, but have a very specific focus on the south and west sides of Chicago, and in particular are focusing on the area in East Garfield Park around our building, which is called the Hatchery. We are the co-owner of and one of the two main tenants of the largest food and beverage incubator in the country. And that opened last year, right at the corner of Lake and Kedzie at the Green Line stop. And so from that base, in normal times, as you can tell, I'm not in that at the moment, we spend all of our time trying to help as many entrepreneurs as we can, particularly those on the west side. So what I thought I would do tonight, just as a way to illustrate the way that we think about helping small business owners, is to just show you the picture that I use on a frequent basis when we're doing presentations like this for small business owners who are desperately seeking capital in order to be able to finance their business when we're in the midst of up and down shutdowns and all of the different struggles that COVID-19 has imposed on the entrepreneurs that we care most about. So what I typically try to do is to show all the options that either have been, currently are, or will soon be available for emergency capital. And I just start geographically at the top and work all the way down to the smallest of the footprints. So I think most of you know that the SBA has had the EIDL and the PPP programs. Most importantly, though, the state right now is still running the business interruption grants effort. The state has $220 million to distribute in grants to small businesses that must be in the hands of small businesses by December 30th. Every penny that's not in the hands of small businesses goes back to Washington, because it's all CARES Act money that was appropriated by Congress in April with a fixed and firm deadline of the end of this year. So Accion is serving as the program administrator for that. We are working every single hour of every single day to get $220 million out so that we don't give any money back to Washington. At the same time, I'll highlight one other program, and that is the down and underneath the City of Chicago line. The Chicago Small Business Resiliency Loans is closed in applications now until Monday. We're going to be reopening that application so that we can serve particularly low-income area businesses within the City of Chicago and provide very low-cost loans on an emergency basis to as many entrepreneurs as we can. We've already provided $20 million in loans through that program, and we're going to try to get as much as another $20 million in loans to small businesses on the South and West sides by the end of this year. Again, firm and fast deadline, cannot move, end of this year. Finally, in the midst of all those other programs that you see, which I won't dwell on, Accion has its own efforts, and so I'll spend just a moment on what we do in normal times and what we'll be returning to early in the new year. We do, in sort of thinking about the capital and the coaching connections, we provide capital that is between $500 and $100,000 with no minimum credit score and very flexible underwriting. We essentially look at cash flow. Do you have the plausible path to repay the loan? And if so, we will invest in you. And if not, we'll prevent you from taking on more debt than you'll be able to repay, which obviously just takes the hole even deeper. So we think flexibly about that in either term loan or line of credit form. The coaching we provide is always free. It's one-on-one, and it starts by listening carefully to what a small business owner is trying to achieve. And then we create a path with them through all the steps that, through our experience, are required for a business to be structured sensibly and be able to grow over the course of time. And then on a milestone-driven, date-driven basis, we work with that small business owner to continue to grow either incrementally or more over time. And then finally, for the connections that we provide, we just try to do the best we can to make sure that entrepreneurs who can't get everything that they need from us can get it from somebody who we trust. And so we have a network of people who we connect our small business owners to in order to provide all that. Altogether, these are the ways in which you can reach us. So jot any of that down as you like. I even put my own email down there because I'm eager to help talk through any of this in more detail for anyone you would like. But just to put a couple numbers on it before I stop, in all of 2019, we were able to provide approximately $3.8 million in capital to small businesses, and we coached another 1,500 entrepreneurs. In 2020, we're trend lining about $340 million in capital to small business owners, and we'll be coaching something on the order of 6,000 entrepreneurs, all of which is focused on entrepreneurs of color, female entrepreneurs, and in particular, the entrepreneurs who are trying to build and grow good businesses on the South and West sides of Chicago. So with that, I'm going to pause, and I look forward to the discussion. I really appreciate the opportunity to speak tonight.
Brad, thank you so much. That was great. I will now pass it over to Eric Smith, who will tell us about the activities of BMO Harris Bank.
Great. Thanks a lot, Rob. And it's an honor to be here with you this evening, and certainly to be joined with such esteemed panelists as Brad and Ghian. I would really welcome the opportunity to share what BMO Harris Bank is doing, particularly during this time of crisis. I'll start kind of in a similar fashion as Brad did by describing a little bit of what we do sort of in a traditional environment. And I think first looking at the different lines of businesses of how we support our clients, starting first with the retail bank, as you'll see on the next slide. We provide a wide range of products and services to our retail clients for consumers, obviously checking and savings accounts, credit cards, mortgages, and cash management. But as part of our business banking effort specifically, we're working directly with small businesses that typically have an annual sales size of 5 million and below, so ranging from startup type companies to about 5 million in revenue size. And we typically will provide them with some sort of loan or financing that will help them with their operating needs for their business, and loans that are typically no more than $1 million in size. We will be, as we move through this crisis, really focused on ways that we can help to promote inclusive economic recovery. And so we will be very focused and excited about the opportunity to make sure that we can leverage our resources as a bank to support minority-owned small businesses. And we'll be working to launch a new $100 million loan fund that will be specifically for Black and Latinx consumers that are looking to obviously gain financing to support their businesses. And as part of that, we have the pleasure of working and partnering with Brad and the team at Accion to make sure that we can also provide the mentoring and coaching that those companies may decide would be helpful for them to really improve their strategy and return to being vibrant businesses. As we think about some of the other areas that we serve, community development is also a very important area for us. And as you look at the next slide, you'll see that our community development lending efforts range from either economic development types of projects to affordable housing. And within that, you have a wide range of types of loans that we may provide. But we believe that it's very important to make sure that we're providing access to capital in communities to really help to promote revitalization of communities, and to do it by specific efforts and a comprehensive approach to working with organizations, developers, in those communities that are leading those types of efforts. The other area that we also support in community development is through community development investing. And those investments, as you'll see on the next slide, may come in the form of new market tax credits. They may come in the form of CRA qualified investment funds or marketable bonds. But we believe that that's a very important, useful way for banks to provide access to capital to these communities. The last area that I will also highlight is around the work that we do from a philanthropic standpoint. And that's something that we think is very important to make sure that we really provide the sort of public-private partnership that is essential for our local economy. And we do that, in fact, by focusing on a couple of different areas. Education is a main pillar for us. Economic development is another. Workforce development is also something that is a key area for us. Last year, BMO was proud to support the Mayor's Invest Southwest initiative. And we did that with a multi-year $10 million gift to United Way to focus our efforts on the Austin community, specifically around workforce development. And again, joining many other corporate partners and community partners to provide that comprehensive effort around community development. I had the pleasure of joining the mayor today for a celebration for the 1-year anniversary for the Invest Southwest initiative. And many of you have probably seen the 7 corridors around the city of Chicago that were earmarked for investment that was before certainly our COVID crisis and the economic impact that we've seen. And so we know now more than ever, those specific communities are going to need our assistance to really combat the various forces that have come against us as a result of COVID, as a result of the economy, and as a result of the social and racial injustice issues that we continue to grapple with, and making sure that we can work very collaboratively to address the wealth gap and issues of systemic racism that we believe are certainly unmasked as we've seen over the last several months. So that's a little bit about what BMO has been doing, and we look forward to sharing more details around our continued investment and focus around inclusive economic recovery.
Thanks, Eric. That was great. Really appreciate it. And our third panelist will give his introductory comments. That's Ghian Foreman. Ghian, take it away.
Thank you, Rob. All right. So I'm the president and CEO of Emerald South Economic Development Collaborative. Emerald South is a new organization in Chicago on the South Side. It really it was put together kind of thinking about the Obama Center coming to Chicago and the opportunities that would come as a result of it, and kind of saying, well, how will the surrounding communities benefit from it? And so, from my perspective and our perspective from the board, we think it's about wealth creation. So if you go to the next one, so I have a quote that I've been saying for a long time: wealth is the byproduct of solving problems and creating value. When you do both of these things effectively, you create a high rate of return. And so that's kind of the focus that we've been looking at. The next slide, there's community wealth and there's individual wealth. That might be too small for you guys to read. But, we can think about it from a couple of different perspectives when we start to think about the needs of the community. So the area that we are specifically focused on the south side of Chicago is, if we go to the next slide, is Washington Park, Woodlawn, and South Shore. It's about 90,000 people in that geography. But we're not just looking specifically at that geography. We're looking a little bit broader than that, kind of the light green area as well. So here, our mission is we basically are saying, hey, we want to create community wealth by amplifying our pride, power, and investment for this specific geography. Let's go to the next slide. So our mission is to attract and coordinate investments through community convening, collaborative partnerships that increase local ownership and prosperity. Next. So our job is to be a capital attractor, a truth teller, a collaborator, and an advocate. So as we survey kind of everything that was going on, there are a lot of small business organizations that is working to help the small businesses. Brad is there, Eric is there, but none of these things don't really come together in a good way. So we thought that there was something that was needed to kind of pull all of these things together to the region. We'll go to the next slide. So a little bit about the region. When we look at the broader region, it's about 220,000 people in this region. About 86% of them are Black in this region. And so we when we look at it, what we hear on television, across the country, how bad the South Side of Chicago is, how bad the South Side of Chicago. So from our perspective, one of the things we thought about was to be able to attract the appropriate resources, the story has to be told appropriately. If the only thing that we hear about in these communities are how underserved they are, how much investment is not going to these places, why would it ever attract investment? So we've kind of taken a different perspective. You go to the next slide. So if we look at comparable cities for this region, it's comparable to Durham, Madison, Wisconsin, Richmond, Virginia. These are all cities anchored by university. We have the University of Chicago in this region. And so now it starts to look a little bit different. The next region is the population of Black people. So now you're looking at it compared to a Cleveland, an Atlanta, or New Orleans. So now we're saying, well, why would one invest in the South Side of Chicago in some of these businesses? Or why would one invest in Atlanta, New Orleans, or Cleveland, or Durham? And so when we start to take a little bit of a different perspective, now here's where the opportunity is. We'll go to the next slide, please. We have incredible transportation, not only public transportation, but access to airports, and the fiber network is incredible in this area. Next slide. And we have global engagement from the University of Chicago. We have healthcare and quantum computing from the University of Chicago, computation, and we have incredible cultural events in the area. Next. Fourth largest healthcare employment center, and the 8th largest employment center in the city. So all of these facts to say is that when we really start to take a look at, from an asset-based perspective, what we have in these communities, right? That the beta looks a whole lot less, and it's still not a traditional place where investors are going. So the alpha may not always be comparable to the deals maybe that come across Eric's desk, maybe a different branch of Eric's desk, someone else focused on this, but we also have the opportunity to kind of help these communities grow and to ultimately what we were talking about in terms of building wealth. So that's enough. I won't go through the rest of the slides, and we'll get more into the conversation.
Thanks, Ghian. That was great. I think I'll start with a question, which is, we have one large bank represented here and two organizations that are more focused on communities in need. I'm just wondering how each of you thinks about the role of focused organizations versus large financial institutions, especially as some of the large banks like BMO Harris are way more engaged with trying to have a greater impact on needy communities. I don't know who wants to go first. Eric, you unmuted yourself. So why don't how do you
Sure,
think
I'll start. I think it's important for us to have a partnership because we are all serving a very important community, and there are different segments that I think we serve in terms of the size clients that we're working with. If I'm working with retail clients right now through this crisis, it was important for the bank to be able to step up and provide financial assistance through loan deferrals and mortgage deferrals, and to work with the city of Chicago around mortgage forbearance, and to join with the city of Chicago and a housing solidarity initiative to prevent the number of foreclosures and folks that are being evicted. As I think about PPP, that was something that the banks were well positioned to make sure that we could lead that sort of initiative in supporting small businesses. So we were able to galvanize our 500 bankers across all of our markets and serve over 20,000 customers to process funding for PPP, and to make sure that we were also serving those minority-owned businesses that had been left on the sidelines because perhaps they didn't have a banking relationship. And so I think having the breadth of resources and the reach that we have from our, the standpoint of our presence is very important, not only for our communities, but for the broader economy. But it's also important for us to be able to partner with an Accion, for instance. Brad has done tremendous work and partnership with the Chicago Community Trust in setting up emergency funds, loan funds for small businesses, for the not-for-profit organizations. And so one example of the way the bank can work with that and to partner is to make sure that we can do a participation or provide funding to support those types of funds, so that, again, there's additional capital that's made available to people that need that during a time of crisis. So those are just a few examples of ways that I think we can certainly work together, and certainly through our own philanthropic work and our foundations and the things that we're doing to provide funding to these organizations. It's critical that we do that. And then lastly, I think also being able to serve on the board of organizations in the community and provide the intellectual capital along with the financial capital is also critical.
Great, thanks. Brad, do you want to?
This is a tough question for us. We are in the midst of creating our new strategic plan that'll run us 2021 through 2023. And quite literally today at 1 o'clock, we were evaluating our options here on the following axis. Is it better for an organization like ours, which is a mission-driven, nonprofit, community development financial institution, to be place-based and have that be the lens through geography? Or is it better for us to be offerings-based, through which we just do what we do as effectively as possible, and we partner with organizations like Ghian's, which is very focused on a very specific geography, and other organizations like that, sort of at the ground level, while also focusing on our partnerships with the BMOs of the world, who have a footprint that's far, far larger than ours. So there are decent arguments on either side of that one. And we're going to continue to evaluate that. I can talk all day about either one of those two sides of it. But I'd love to hear Ghian's point of view on that, because of the way that Emerald South has chosen to focus specifically on that particular corridor, which, as he said, is not like it's like some tiny little like 3-block area. It's as big as a mid-sized city, but nonetheless, like within the context of Chicago, it's place-based.
Yeah. I think about it like it's an ecosystem, right? They all, if perfectly working together, it works really well. And when it's not, when the ecosystem is out of balance, right? And it's not as many bees, maybe that was for cell phone towers or whatever, the ecosystem gets out of balance a little bit, right? And so some of our organizations, we have relationships with the larger institutions. It's a little bit easier. Some of our organizations have relationships with the Accions of the world, right? But the need is so massive, right? It could be 10 more Accions and it's not going to help. It could be 10 more BMOs, and not that it's not going to help, but the need is still so massive, right? And so that's why it's important that, I mean, we know each other, right? We're in the same rooms on a regular basis in organizations smaller than ours, right? I think that that's a part of why you need the big institutions, because frankly, in order to become a large business, we're going to have this kind of standards that Eric is going to say when this comes across our desk. That's what a Brad helps you with. He's going to start off and say, you're not ready to go talk to BMO yet, but let me get you there. And slowly but surely. And, you know, Brad talked about the amount of consultation hours they provided. Eric could say the same amount of thing, right? When you're working in these environments where, you know, it's tougher. It's tougher not only to attract the capital, it's tougher to absorb the capital. Partners like the big banks and the small lenders as well, they become partners to us. It's not just a supplier of money. It's a real partnership.
Yeah, Rob, think about it this way. We have to start with where an entrepreneur is, and that is with a trusted partner in the community that small business owner knows to go to and talk to when they need something, right? Start with that. Then we need the wealth that has been accumulated in typically large institutions, which are looking to put that capital to productive use in our communities in a way that's going to make the biggest impact possible. And then it needs somebody in between to help move the money from where it is to where it's needed. So we sit in between, but you got to have all three of those for that ecosystem that Ghian was describing to work.
And the key to what my quote was, and all of that has to happen efficiently, because it happens now, it just happens really inefficiently. And so when you have inefficient processes, the time takes so long, you know, now you have another problem you have to fix as well.
And I would add one other component. It has to happen efficiently, but also equitably.
So as I think about all this work, right, it is enormously impressive, and you're making a big difference for individuals and companies. I'm just wondering about the horizon for which you think that we're going to see sort of fundamental changes in the communities. So at a level where it's not just, you know, piecemeal is unfair, right? That's the word that came to mind, because it's more than piecemeal, but it's not like they're, you know, Ghian, how many years are you thinking until those neighborhoods are where they should be?
Well, I'm gonna put it back to you, Rob. You're at the Rustandy Center, right? Across the street from the campus, we can make a direct decision that we are going to support these surrounding communities, both from a residential perspective, from a business perspective, right? I think that maybe some people didn't see it this way from the events, the riots that happened this summer. But, you know, if the shooting takes place downtown, the residents of downtown think, oh, I have to flee Chicago. It's time to move. The city is going up in smoke. But in some of the communities I work in, a shooting on the block is pretty a regular occurrence. So I think when we'll start to see a difference is when I don't think about, oh, that was a shooting over there, but that there was a shooting, right? Because that impacts all of us. So when we have to start thinking about humanity, to really start thinking about the kinds of changes we make, you know, to look at the wealth gap, to look at the education gap, the health gap, the mortality rates. I mean, so to talk about the impact on communities, we got to talk about humanity a little bit first. Capital certainly solves some of these things. I see it from the perspective of the police board, right? There's one side that says defund the police. The police aren't doing good things, positive things in our community. And there's another aspect where you look at it and say, well, look at the communities that the police have to police. We put those police in bad situations, right? That's not the police officer's fault. It's not the residents' fault who live in these conditions. How do we create conditions where people can pursue life, liberty, and the pursuit of happiness? And we're far from that right now.
Yeah, I think, Rob, there's a question that we need to ask before we ask how long is it going to take. And the question I would say that's before that is, what exactly does success look like? What are we trying to achieve? And So I won't say, certainly on behalf of an organization like ours, which has 30 people, it's a nonprofit. Yes, it's big in nonprofit terms, but it's, fly speck in terms of the greater economy. Our primary measure is increasing the wealth of communities. And to do so, we think that the most effective way to do so is to invest in the business owners who are already there, who will circulate all of the wealth that we can help them create within their own community, rather than have the wealth go into those businesses and then go back to headquarters, wherever headquarters are, and whatever city or country that business might be, that conglomerate might be located. And that at least if we increase the wealth in communities through increasing the profits of small business owners as a proxy, that's going to help at least a portion of that multivariate, incredibly difficult set of problems that Ghian was just suggesting, where you've got wealth, education, health, all of the things, right? So it's not just a measurement problem, but it is a definitional problem to start with before we get into how long it should take.
I agree. I think it's a multi-year approach, but I am an optimist, and I am very encouraged that I see significant problem solving underway between the public and private sector. As I think about the agenda that Mayor Lightfoot has laid out from the start, it has been focused on inclusive economic growth, and the strategy and the recognition that we have some long-standing, deep-rooted issues across Chicago that has created this unfortunate dynamic where Chicago is one of the greatest cities in the world, but yet one of the most segregated, is clearly tied to the fact that we have communities that have been underinvested, underserved, where there's been an lack of access to capital, and there's been a very focused strategy to make sure that we can address that. And to do that by having banks step up and provide, access to capital, and to also make sure that there's direct investment. Now, of course, the pandemic has just made that whole exercise that much more challenging, because now the issues are going to be multiplied, tenfold, as we think about the number of small businesses that have announced that they're closing their doors through the crisis. 20% of small businesses have already said that they're closing. That number is 40% for Black and Latinx and minority businesses and women-owned businesses. So now what I'm seeing is banks are stepping up, and one, they're recognizing the need to have diversity in the C-suite and on their corporate board, and they're recognizing the need to make sure that they're better serving these communities that have been left behind. So I am very encouraged by what I'm seeing, and I think that it will benefit us to make sure that we can work together to achieve these very important goals and to get through this crisis, and to make sure that we're promoting inclusive economic recovery and that we're leveraging the public-private partnerships to do just that.
Ghian, I think you wanted to.
Yeah, I wanted to share this slide. So we took a look at some data to kind of look at spending in our geography, and everything that you see in yellow is the leakage, all the different products. The only place where the money is spent in the communities that we're talking about is direct retail establishments, liquor, beauty, shoe stores, gas stations, things like that. Everything else, the dollars are spent outside of the community, right? And so there's a huge opportunity just literally laying right there. These are dollars that people in community are spending, right? And so how do we capture some of this, right? How do we use the relationships that we have with Accion, the relationships that we have with Eric, the relationships that we have with Booth, to be able to say, here is a market right here. The communities could behave differently, could act differently if we could figure out a way to capture some of this, capture the data. So now when you go back to Eric to say, hey, I need a loan, I need to buy this business, or I need to buy this building, you are able to say, look at what sales have been, and you can have a story. But right now, we're not looking at this kind of data. One thing you can do, you can take a look and see in my particular case, we're place-based, right? So we have the university as an anchor. So when I look and see, well, what happened in Cambridge? What happened in East Baltimore next to Johns Hopkins? What happened in University of Pennsylvania? How did they use those anchors to help generate jobs, to generate careers, to generate sales, to generate a local economy, to give BMO a reason to say, yes, let's invest in this, because Accion has 12 entrepreneurs ready to come into this new facility. This is, I think that when we start thinking about it from an ecosystem, this is where we're going to start to see some differences.
So let me, there are like many directions I want to go. I'll see if we can get to all of them. Eric sounded a few words of optimism, I think, for the post-COVID environment, even though, right? So even though it's been phenomenally disruptive, see some bright things on the horizon, the private-public partnerships. I sense sort of a bit of an awakening that sort of, as Ghian says, it's all part of a bigger community, and sort of a notion that the disparities in health outcomes have sort of made more and more people aware of the needs to invest in these communities. How do you see reasons for optimism in the post-COVID world? And what are there additional reasons for that optimism, or not?
Man, I stay optimistic, because what's the alternative,
Mm-hmm.
right? Look, people are going to figure out a way to survive, right? And I think that this is where innovation comes in, when people are trying to figure out a way to not only survive but prosper, right? And so I think that we have the opportunity, not the community, but we have the opportunity to kind of make some decisions on how we're going to do business that can positively impact some of these communities that we're talking about in an equitable manner, right? And I think that I'm very optimistic. A lot of people, hey, what can we do? What can we do? And as long as people are taking affirmative actions towards improving this, I think it's positive, right? The thing that I don't want to see is just you put out a Black Lives Matter statement and it's on your website and you keep it moving. That doesn't do us any good, right? But if we can really start to talk about how equity makes it better for everyone, then I think that we're going to start to make some differences. So I pretty much stay optimistic.
Brad's nodding his head reluctantly.
I'm lucky on this one, Rob, where just because of what we do and who we serve, I'm surrounded by a sea of optimists at all times. I challenge you to find somebody who starts their own business and who really keeps that business going, who is not an optimist. That doesn't happen. You can't. It doesn't make any sense to try to start a business if you don't actually believe it's going to succeed. You don't do that. No one does that. So we're constantly amazed in a really sort of hopeful and positive way at just how smart and inventive and resilient the small businesses that we serve in underserved communities are. The small business owners are geniuses, most of them, in order to make happen what I probably couldn't figure out in most cases. And so like every day, like there's another great story about some business owner just figuring it out. And you can't help but be optimistic in environments like that, where you're just constantly seeing it every single day in the face of ridiculous barriers that no small business owner should really have to deal with. But here we are.
So I bet a number of people on the Zoom call are interested in what they can do. So in particular, what they can do with their investment portfolio. How, as investors, do you think people in the Booth community can provide some capital or some expertise in a way that can help make a difference?
I got plenty of ideas on that one, but Eric, Ghian, you want to take that?
Go ahead.
Well, look, I mean, this comes down to like neighborhood economics. So if we're in a room and we all see each other, I do a quick like snap poll here and see if I could get a consensus in the room just for small business owners. Again, just one small part of the economic development world here, but an important one clearly. For neighborhood entrepreneurs who are seeking to take small dollar loans, call it 25K, right? How much is a fair interest rate to charge that small business owner? Love to hear like the group's view on that. Because here's the economics, and it ties directly back, Rob, to your question. The very first thing that an organization like ours has to do in order to go into neighborhoods and take risks is to reserve for the losses which are coming, right? That's GAAP. So we reserve 11% against losses. So if I don't charge 11%, I'm losing money on every loan, okay? Then I got to go borrow the money in order to turn around and lend it. So I will refuse to pay more than 2% interest on any investment that comes into me because now I'm at 13%. I haven't paid anybody. I haven't done any marketing or outreach. I haven't paid for any technology. I haven't paid for the building. I haven't done any of that. And I'm already at 13%. So our maximum interest rate at Accion is 9. And I got to make up that entire difference through philanthropy. Okay. So if you want to make a difference in our communities in the world of small businesses, and you want to make an impact investment in which you get a rate of return, your expectation should be that you can make 2%, but you got to make market return somewhere else. On top of that, if you want to make a real difference, you can be philanthropic about it and make it such that you don't have to pay back at all in order to cover that gap that I described before. So this is not impact investing in the way that a lot of people have sort of conceived of that, where you come down and think if I get 7%, I've done something right here. Well, maybe in some other worlds, but not in the entrepreneurship world. And so it's tough. The economics are tough, but if you want to make a difference, like I can make that happen for you tonight. It's different though in real estate development and some of the other development that Eric was highlighting what the bank does and what Ghian was highlighting. And so those models are quite separate, I think, from small businesses, but that hopefully gives you a flavor to the economics of what really matters in order to really help entrepreneurs in the communities that we serve and how you can help and at what level.
Right. So, I mean, so Brad, I'm really glad you did that because I was going to ask you to explain the economics of the business, but you did it in that context, which just says, right, enormous impact on the communities, but just impossible to make a market return without philanthropic support.
Not impossible.
Okay.
But it's impossible if you're going to charge people in the communities
right
rates that we think are fair.
Right.
Which is why you go online, you work with Cabbage, On Deck, all of the high-flying fintechs, at least before COVID anyway, before they all got washed out. You're going to pay on an average of like 47%. Now, nobody knows that because there's no Truth in Lending Act for small business, but generally speaking, that's a decent approximation, somewhere between 30 and 70% you'll pay online. And we just won't do that.
Ghian, why don't you share, or Eric, do you want to go ahead?
So I certainly think, I left banking and started a real estate firm, development company, and then while I still operate that, but then joined the nonprofit space. And so, I mean, I think the first part is that, the expertise that we have from our individual fields, right? I mean, that's humongous. None of my peers in these business service organizations have an MBA. And so there's some things that I'm exposed to, that they just don't have. So when it comes that time to come talk to Eric, maybe we're not speaking the same language. That's the first part. The second part is that, invest in the things that you invest in. You would invest in a white company, invest in a black company, invest in a black neighborhood, a Latino neighborhood. It's the same thing. But the easiest thing I think people can do is support these companies. If you want these companies to work, I've eaten in restaurants in everybody on this call's neighborhood probably. And probably nobody is eating in a restaurant in my neighborhood. And so sometimes it's just the little things like that to say, let me try to help this business work. I ordered a present. It went down in flames, but it was the thought that counted. I opened the New York Times a couple of Sundays ago. I saw the Citibank made an ad for all these small businesses. I ordered something for my wife. Like, man, that ad had to be worth $1 million. Let me support by buying this $30 bracelet that she doesn't need. But it was me supporting that business, right? And I think that when we all start to take that attitude, and then now let's get past the charity part and say, wait a minute, that's a very nice bracelet. Let me see if I can help. You know, maybe Brad might want to buy one for his wife. Right. And so, you know, these are the kinds of things. Sometimes it's the small things that we can do that's going to make a real big difference in these small businesses.
Ghian, my wife heard that, by the way. Stop using that.
I would echo many of the comments that have been shared. I think when you look at how you invest, you always want to make sure that you're looking at the valuation opportunities, and that you're buying low and you're selling high, and you're investing in stable stocks and investments. But I think it's also incumbent upon us to start looking again at what are the sectors that represent the new economy as we come through this crisis. Those areas that will bring us out and help to accelerate the pace of a recovery. Are there specific sectors that are looking at new business models for how we become more efficient, faster, better at what we do? The transformational types of investment opportunities. And then I think just building a little bit more on the social impact approach, you have a huge voice with your investment options. It's almost like purchasing power. Be willing to use that voice to ask the companies that you're investing in, what are you doing to support supplier diversity? What are you doing to support health equity? What are you doing to support diverse hiring and practices that are across the board with your C-suite and your corporate board? What are you doing to give back to the community to really foster the sort of economic advancement that we think is really important? And I think that's one of the ways that we come together and we achieve the sort of prosperity and recovery that will be important, is when we focus on things that are purpose-driven and very intentional around how we make our investments really matter and drive the sort of returns that will benefit us all, which I think ultimately we want to be able to say that there is no longer a tale of two cities here in Chicago, or that we are addressing the key drivers of what has led to the wealth gap in our society.
Just one more idea on this. There are a handful of really interesting initiatives that are, I think, really attractive to people who are trying to figure out how to put their time, their skills, and their money to good use in order to help the neighborhoods we're talking about tonight. So I'll just highlight one that we happen to run, but it's not the only one. It's called the Neighborhood Entrepreneurship Lab. And the way this works is that we take a cohort of entrepreneurs. In this case, we're doing a cohort of 10 entrepreneurs right now. 2 of them actually at the same time. We provide them with all the following for 9 months. $20,000 in cash to invest in launching a new product or service over that 9-month period. Project advisors who spend on a weekly basis time helping the business owner solve for whatever it is they're trying to solve for, in order to continue to build the core structure of the business and then be ready to successfully launch whatever it is they're trying to grow into. We have project specialists, mentors, whose job it is in all of this to open doors. All they have to do is get the Rolodex out, make some contacts in the industry that matters, this small business owner. And then on top of all of that, we provide a sequence series of kind of more classic, in this case, Zoom-based coaching, cohort-based topic, subject matter. All of which is to say is that we take a group of entrepreneurs and help them to not incrementally, but exponentially grow over a period of time, where they put capital and coaching to optimal use. And we've worked with a number of different organizations and institutions in order to get a handful of either investors or advisors or grant makers as a group to invest in a cohort of small businesses, who then keep those relationships and they keep working together over the course of time. So it's a way to get all of the above. It's the skills and the investment time that people are willing to make in a structured, highly effective manner, plus the dollars that go directly into the small business owners who we already have vetted and know they will put them to good use and creating more jobs and wealth in their communities. So opportunities like that, I'll work with any or all of you on that kind of thing if you're interested. And there are a number of those that are like that around town that are highly effective.
You know, so Brad, I've invested in companies, small companies personally, and just my experience has been, you know, a little bit of advice, a little bit of dollars goes a long way with some of these companies. You may be talking about a company that doesn't have a website, right? But maybe doing $500,000 in sales a year with no website, right? So, man, imagine what a little web presence would do. Imagine if you had a Yelp page, right? So sometimes it's just some critical thinking that we can add, and you get an incredible return on your dollars. Right now, it might not be, that business might not be able to absorb $1 million. So it may be $25,000. As Brad said, it might be $100,000, right? But I think, you know, when you start to look at a return basis, the return is there. There's still some risk. But the impact that you have on community, you know what I mean, you can't really measure that.
Yeah, and I wanted to follow up with you on the university as an anchor and the university as a partner, right? Because I think my sense is the university is trying to do a lot more, but my sense is you think not enough. So I'm curious to know what you think, rather than we were talking about the individuals on the call, but the big institution in the room is the University of Chicago.
Yeah.
What more could and should the University of Chicago do to support businesses and the development of the communities that you focus on?
You know, I have my ideas about what the university should do. That doesn't really matter. I think that what the university could be doing is using its muscle, right? The university buys a lot from Microsoft. It would be nothing for Microsoft to say, hey, Microsoft, do something in the surrounding communities, or the hospital, hey, Pfizer, do something in the surrounding communities. Use the muscle. Use the skill set. You know, I took the outside impacts model that Kaplan, you know, from Kaplan's class. And this is what I used when I was working on 63rd Street. And I just translated it from the beautiful, well, it's no towers anymore. It's a glass building over at the Harper Center, a glass building, to 63rd Street. And I just converted it into a language. So the knowledge is helpful, but, you know, the purchasing power. Who picks up the university's garbage? If that same company picked up the garbage of every vendor along 63rd Street or 71st Street, they would probably get a 30% discount. That hits the bottom line. So how can the university use its muscle? How can we replicate, you know, some of the programs that are taking place? You know, the 53rd Street it's an incredible facility. If you want to learn how to start a business, it's an incredible facility. Not everybody in the community feels comfortable going to 53rd Street, right? So how do you give those resources to community? It's been done in other places. We just haven't arrived there yet. I'm going to keep pushing. I'll probably keep getting pushed back, but I'm going to keep pushing.
So I'm looking at questions that have come in, and there are a number of people who've been, some of these were beforehand, who have been focusing on a segment of the market that we haven't really talked much about, which are the consumers in the individuals living in these neighborhoods. And their questions around are there practical ways to get them to save and invest, including in stock markets, about the role of FICO scores and other things that may discriminate against people of color, about mortgage availability for individuals in these neighborhoods. Wonder if you could speak to some of these issues and what's happening with respect to them. Eric, I think probably this is most in your domain first.
Sure. I think financial literacy is really the best tool that we have for empowering people that live in underserved or underprivileged communities to get out of the cycle of poverty, to restore sort of their credit profile, and to begin to build the sort of savings and wealth that is really important. As a bank, we do a lot to volunteer hours to make sure that we're providing financial literacy. We do that in partnership with organizations like Accion, like the Chicago Urban League, and many others to make sure that we're providing that sort of assistance, because it's key. Knowledge in terms of understanding your personal financial situation is really the best way that we can work to provide that sort of advancement. And so there's no measure that I would say is enough of what we can do in that area.
And while I agree with you, Eric, you know, it's the rest of the things that the community members are facing that makes that so difficult to put into concept, contextually, to be able to say, let me focus on financial literacy. And I'm overburdened from the cost of housing perspective. I'm overburdened from a health perspective, right? I don't have a grocery store in my neighborhoods. So it's hard to start to think about, man, can I invest in my 401k? I don't have employment. It's difficult to start thinking about, what did the market do today? So this is what I mean about we have to get back to a humanity place. I stopped driving 2 years ago. And so I know how much not having a car has done in terms of, I don't have to pay gas and insurance and all that. I lost weight, so I didn't have to get a gym membership. All the little things you see on Oprah you can do to save money. And I can put that money towards financial literacy. But if I'm worried about, tomorrow, it's difficult. So again, I agree with what Eric is saying, but I think we have a bigger responsibility to try to get people to that place.
And I think if I could just maybe add one point, because again, you're making a really, really essential point. The reality is that there are so many people right now that are hurting and that are suffering through this crisis. And there is a need for us to make sure that we're providing assistance. Starting at the point of financial literacy, when a crisis right now, there's so many different aspects to that. But I think what I would also encourage us to think about is the future. And one way for us to make sure that we're addressing this is to start with education with our kids. And that's a role that I think many of us have been trying to be very proactive around, of working with CPS, for instance, to make sure that financial literacy becomes a part of the curriculum so that kids and people are learning at a young age what it means to start saving, what it means to start thinking about saving for buying a car, or for your first home, or for retirement, understanding what it means to have a checking account versus going to the currency exchange, and making sure that you start understanding what your credit score means. Those are the things around financial literacy that I'm focused on. I think the crisis warrants a whole nother level of education and critical access and assistance that goes beyond just education.
Right, and I think, this crisis is so severe, and the problems in these neighborhoods, even absent the crisis, are so severe that no one would think that, that investment in purely private market solutions are going to solve all the problems, right? They clearly play an important role, but to think that public institutions and government doesn't play a very large role, an essential role, right, would be somewhat naive. Which is why I think, Eric's discussion about public-private partnerships plays a big role. And I think certainly, Ghian, and the work you do, and Eric described it as well, there are a complex array of government programs, government subsidies, tax benefits that that are available, that are part of the complexity, but also sort of the challenge, and sort of what I think some of our Booth students and alums appreciate about this is that the financial engineering in some of this community development work is probably among the most complex structures.
Yeah, but so the interesting part is that, history shows us that these same neighborhoods are the same neighborhoods that come back, but we wait until late to, it's proven itself over and over and over and over again, but yet we wait to see what's going to happen, right? And so I think if we take this approach, if we look at this ecosystem that we have and we start to say, let's look at it early, let's look at education, let's see how do we get Brad in it, right? And you start to look at the chain of things. How do we get Booth involved? How do we get BMO involved, the city involved? And you start to build this case around, hey, everybody can win if we do it like this. You know, it works.
Yeah. One of my most lamentable lessons that I had to internalize was that for whatever reason, there's an element of our leadership in Washington, and this is not political at all, who believe that direct spending is bad because we can't afford it, but giving things away through the tax code is okay because it allows people to keep more of their own money. Those are functionally identical for the federal budget, and yet somehow one is good and one is bad. What that leads to then is unnecessarily complicated methods through which you can access federal financing, which makes it much harder than it ever should be for underserved communities to access that financing because of the legal complexity necessary in order to implement those programs. All the costs that gets allocated, no offense to our lawyer friends, but all the costs that have to go through the legal and sort of structural work that are necessary in order to put together New Markets tax credit deal or any of those sorts of tax-driven financial structures is every penny to the penny less money that it gets directly invested into the communities we purport to serve through those programs. So screed over. But what does matter in policy that we actually can do something about is specifically in our own localities with our own choices, the Accions, the BMOs, the Emerald Souths of the world, and how we evaluate who to invest in and who not to. So specifically for us, one thing we're working on right now that we must fix that's been a problem since our founding 26 years ago is that we try to invest in communities in a way that presumes that the community already has wealth upon which to invest. That's stupid. The way that translates is that you got to have collateral in order to get a loan. Well, if you don't have the wealth in the first place, in order to have the valued collateral, then how are you going to come up with the magic collateral in order to get the loan? That doesn't make any sense. And if the exact same house that is at 63rd and Addison, they sit exactly the same, every single screw in those buildings are identical, but the dirt at 63rd is worth a lot less than the dirt on Addison, then the collateral is valued far less on 63rd than it is on Addison, and therefore, without doing anything else, you're making it much harder for the guy on 63rd to use that asset to get a loan. So we got to get rid of all of those structural impediments in order to make smart investments in our communities. We can't fix the nonsense in the debate in Washington about tax policy versus spending policy. We can fix how we have our own credit policies use things like collateral.
Yeah, so I was fortunate enough to work with my colleagues at the Rustandy Center and US Bank and CNI to write a case study on the Pullman Historic District development, which is, a very large set of projects and by any measure quite successful. And in order to make it a case that we could teach to the students, we had to write a companion piece about all of the acronyms and associated programs. And I was afraid that it was going to be longer than the case. And, but it's actually, it's a phenomenally complex web that has to be navigated. So beyond the impediments, Brad, you were talking about in just getting all the pieces to work in, the institutions and the government creates a lot of incremental complexity.
In order to close financially on the hatchery, which is the incubator we are a joint venture partner on, I signed 2,200 pieces of paper. It doesn't have to be that way. But in order to do community development, that's what we're facing at the moment. So long-term, all the smart Booth alums are going to go change the way that city, state, and national funding financing mechanisms work.
I'm gonna make it even crazier. Today, I had a conversation with the bank today about a new market tax credit allocation. They told me they wanted me to have an anchor tenant to take 40% of the space. I said, if I had an anchor tenant to take 40% of the space, I wouldn't need new market tax credits. Why are we having this conversation? So, this is the things that we deal with.
And since we only have a few minutes left, we won't get you started on opportunity zones.
Oh, no, don't get me started. Definitely.
Yeah, so by the way, Brad, the hatchery is amazing. Pre-COVID, I did manage to go to an event there, and it's phenomenal space. And
Everyone, please join us at Lake and Kedzie as soon as we have a healthy way to do so, please.
yes, indeed. I think we are practically out of time. I wonder if any of the panelists want to make any concluding remarks before I turn it back over to Vern to talk about future events.
I want to welcome you guys to come take a chance, do something a little bit different, work in some neighborhoods you never worked in before, some entrepreneurs with a different skill set than what you have, right? It's the variety that allows one to make good decisions.
And I'll say thank you for all of your time in the run-up to a Bears game, Monday Night Football. And know that I meant it when I said that if you're interested in providing your time, your talent, your funding in whatever form that is comfortable for you, that's what we do. We move money from where it is to where it's needed. And inclusive of that is all the talent. So let me know how I can work with you, and we'll make sure that the entrepreneurs that we seek to serve in the Southwest sides get the benefit of that.
Yep, and I assure you it will be a very enriching experience for any and all of you who decide to do so. So I want to just thank the panelists. This has been a phenomenally enlightening and important conversation. I think we've all learned a great deal, and commend you for the very, very important work you're doing, and hope we can play a role in making it more successful over time. I will now turn it over to Vern.
Thank you, Rob. And I want to, on behalf of the roundtable, the Chicago Booth Alumni Finance Roundtable, I'd like to say thank you to Ghian and wish him well at Emerald South. I'd like to say thank you to Accion and his connector role. I'd like to say thank you to BMO Harris for their provision of capital. They all three of them represent organizations that can be found on the west side as well as in some other parts of Chicago. And so I encourage our finance professionals to consider how they can participate in this important market. Rob, thank you for the work you do at Rustandy Center in connecting Chicago Booth to the social issues that matter. And in this year of extreme change, we are looking at important intersections of finance with society. And tonight we looked at financial inclusion. And I'd like to suggest that on November 12, we will be discussing women and leadership in finance. And we will be looking at the challenges of facing women and the successes of women in finance. And I would suggest that all of us in finance can benefit from these perspectives. So thank you again to our speakers tonight, and I look forward to seeing many of you again on our next webcast on November 12th. Thank you.